help you pick the right stock at the right time.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. US President Donald Trump says he's willing to forego the March 1st tariff deadline with China if both parties are close to an agreement. Bhushan Power's Committee of Creditors reject the promoter's last-minute settlement offer to pick JSW Steel as the winning bidder. That is a Bloomberg Quint exclusive. CPI inflation eases further to 2% in January on falling food prices. Industrial output recovers to grow 2.4% for the month of December. The Reserve Bank of India has imposed a 1.5 crore penalty each on Allahabad Bank, Bank of Maharashtra, Indian Overseas Bank and Oriental Bank of Commerce for not monitoring the end use of funds. Andhra Bank was served with a penalty of 1 crore rupees. Well, amidst all this news flow, the global markets have been hunky-dory and that should be showing on our screens as well. Firstly, let's take a look at what happened in the US markets. The S&P 500, the Dow went up about 1.5%, 1.49% to be precise, and the S&P 500 broke above the 200-day moving average. It was a sea of green across the US screen, buoyed by two factors essentially. One, the shutdown. There might be a temporary deal to avoid the further shutdown, and two, Donald Trump sounded slightly conciliatory or send out conciliatory signals with regards to China trade talks. Remember, they kickstart tomorrow in Beijing. So ahead of that, Donald Trump's signals led the markets to believe that maybe there is a possibility that there might not be further deterioration in the relationships between the two entities, as a result of which the US markets did what they did. Asian markets are taking on from that. So the Nikkei is up about 1.5%, Hang Seng about 0.5%, Shanghai about 0.33%. The SGX Nifty, which was marginally weak in session yesterday as too, is moving up or showing signs of at least starting off mildly positive, which is not a bad sign. In terms of cues that came out post-market hours yesterday, inflation fell further and IIP logged in number which was above what the street was working with. So CPI inflation is now close to 2%. That's the retail inflation, and it's steadily trended downwards and is now at the lower end, at the lowest end of the RBI's comfort zone. 4% is the comfort zone, remember. And industrial production, IIP, has actually inched above at 2.4%. That led to a slew of reactions. I chose the one from Neelkanth Mishra because I was talking to him a few days back on this subject. And his quote on CPI, he's saying that this reading on inflation puts a downside risk to MPC's recently downward revised inflation estimate of 2.8% for the fourth quarter. The first half of 20 estimates of 3.2 to 3.4% seem realistic for now, but the economy is slowing down due to the financial system stress, and core may be at a risk of falling below expectations. Now, what happens to the inflation print is anybody's guess. These are informed thoughts that we are trying to bring to you, but more importantly, will this raise the clamor for rate action to be even more going ahead? On social media, already both sides have put out their voices. They are pro and against the rate cut or aggressive rate cut cycle, talking about it on social media as well. But certainly this print seems to suggest that the clamor for a rate cut could only grow. It'll be very interesting to see what happens to the yields in the session today. And does that bring about a bit of an uptick in the Nifty Bank? Because otherwise, markets have been slightly lackluster. So today we might start off higher on positive global cues. So that will aid sentiment. And let's see if the Nifty, which corrected yesterday, but the broader markets did not, can the Nifty come back? But more importantly, the breadth showed signs of some bit of positivity yesterday. It's a key monitorable in the session today. Can we recover and can we sustainably recover? That's the key thing for the market breadth. Let's see technical parameters, and there will be some resistances that we might have at about 10,930 or thereabouts. Let's see if we manage to scale above those levels or no. However, what are the stocks to monitor in a scenario like this? There are 4 or 5 which could, and some large ones that could react today. Firstly, on numbers, both Sun Pharma and Coal India reacted or rather came out with numbers which were above estimates. Now, the question mark only is, Can there be further reaction on this? What are brokerages saying? We'll talk about all of this on First Word. So I won't dwell too much on this, but just to mention that both the numbers were above what the street was working with. Coal India, the margin performance was very heartening. We'll talk about this a bit later on, so I won't dwell too much on it. But keep in mind, these two could react on numbers which were above estimates. JSW Steel declared the winning bidder for Bhushan Power and Steel. Let's wait and watch what happens here. If anything, I thought the note on HEG was interesting from Macquarie. They have maintained the outperform, but they've cut the target price to 3,026 from 4,390. That's a really steep gash in the market price. Yes, it's above, or the target price. Yes, it's above the current market price. But what makes it interesting is because HEG and Graphite India have been such volatile stocks the last few days. They believe that it's a strong quarter 3, but the sharp margin contraction is likely ahead. They've cut the FY20 and FY21 EPS estimates by 31% and 27%. That's a very steep gash on EPS estimates as well, and they believe that the stock may remain under pressure until margins stabilize. So do watch out for the EBITDA margin performance for HEG and Graphite India over the course of the next few quarters. That could be a key to what the stock does. Remember, the management speaks to us at 9:40 today, so you should stay tuned for that as well. A very strong quarter for 3 companies: Bata India, Indian Hotels, margin performance pretty good for both of these, and IOL Chemicals in particular. The stock corrected quite strongly yesterday, but let's see if the numbers manage to bring about some bit of cheer to this one. And last but not the least, Prestige Estates. The reason I bring this up is because real estate is in the thick of things. However, while Prestige Estates came out with margins which were good, the revenues and the PAT numbers were slightly lackluster, so a bit of a mixed bag for this one. There was a decrease in inventory in the base quarter which may have led to this as well. So whether the street looks at the margin performance and gives a thumbs up, or does it look at the revenue and the PAT performance and believes that this is a bit of a miss this quarter, remains to be seen. Let's see what the reaction on this one will be. We'll talk about all of these during the course of the show, but let's tell you what's lined up on First Word today. Start off with JSW Steel. May well have had the last laugh with Bhushan Power and Steel's lenders choosing its bid over the previous promoters. Vishwanath comes in on that story. Sumit then joins in to take us through the list of bidders in the 10th round of the city gas auction. I take you through what's ailing the insurance sectors with the stocks trading near about 52-week lows. Nikki then joins in to tell us what's aided Coal India in the 3rd quarter. And Darshan comes in to talk about what's kept Sun Pharma in good financial health in the last 3 months of 2018. But start off with the Bloomberg Quint exclusive. Sources tell Bloomberg Quint that the Committee of Creditors for Bhushan Power has declared JSW Steel as the winning bidder, essentially rejecting the last-minute proposal by the erstwhile promoters. Vishwanath Nair reports.
Despite considerable judicial delays and the last-minute plan by Bhushan Power's promoter, JSW Steel has managed to back the asset with a winning bid. According to what sources are telling us, the lenders to Bhushan Power and Steel, the Committee of Creditors, has sent out a letter of intent to JSW Steel, offering all the assets of the company in lieu of the 19,300 crore offer that JSW Steel has made. Now, this 19,300 crore will be paid upfront to all the financial creditors in Bhushan Power and Steel. Remember that their dues are close to 47,000 odd crore. For the operational creditors, JSW Steel is offering another 350 crore as opposed to their claims of about 620 crore. So in both creditors' cases, financial as well as operational, they will be taking a certain haircut. However, lenders said that this is better than what the promoter had proposed to repay the lenders over 17 years using a CRPS scheme. So according to the lenders, an upfront payment makes more sense in the current environment. Remember that this case has seen considerable delays because of litigation by Liberty House, who was the second highest bidder in this case, as well as Tata Steel, who had challenged JSW Steel's revised bid in the case. Both these litigations were put to rest by the National Company Law Appellate Tribunal later on in the hearing. As well as the promoter of the company, Sanjay Singhal, had challenged the constitutional validity of the Insolvency and Bankruptcy Court at the Supreme Court. However, the Supreme Court upheld the constitutional validity and said that Sanjay Singhal's challenges were dismissed in the matter. Now, the Committee of Creditors and the Resolution Professional for Bhushan Power and Steel will be filing the papers with the National Company Law Tribunal for final approvals for this deal. And once that comes through, then the transfer of assets can move on.
Well, let's wait and watch if this brings about any cheer for JSW shareholders or no. But yeah, the company would certainly be having the last laugh. This is a Bloomberg Quint exclusive. The next piece on First Word. The government is conducting the 10th round of city gas auctions, and there are quite a few firms that have shown interest in acquiring more licenses. Sumit Sarkar is here with the details. Sumit, now the Oil and Gas Ministry will be surely hoping that the bidding for the gas is as aggressive as it was in the 9th round.
Well, bidding has actually been very aggressive in the 10th round of city gas auction also, and the final results of this are expected to come in by the end of this month. Now, if you see, this is the second largest city gas auction. Nearly 50 new geographical areas covering nearly 124 districts have been put up for auction in the 10th round of city gas auction. Now, the PNGRB so far in the last 10 years has identified nearly 192 areas, of which it has awarded 140 areas. And in the last round, there were 86 areas that were discovered, of which 54 areas were awarded. And this round, they have put up 50 new areas for auction, and now there are more than 225 bids that have come in for this 50 new areas with an investment commitment of more than 50,000 crore rupees. So that's a huge investment commitment and a good better response that they have seen from investors. Now, after a successful completion of this 10th round of city gas auction, nearly 52% of the area and 70% of India's population will be covered under the city gas distribution network. Now, if you see among the listed players, Adani Gas has bid for most number of areas, close to 19, followed by Indraprastha Gas, which has bid for nearly 15 areas. Gujarat Gas and the joint venture between Adani Gas and Indian Oil Corporation have placed bids for around 7 new areas, while Mahanagar Gas has put in bid for only 2 areas in the 10th round of city gas auction.
Some of these areas will be fiercely competitive.
Well, yes, for Adani Gas, now if you see, now they have put in bids for around 19 areas, and this is after winning 13 areas in the 9th round of city gas auction. Now, of this 19 areas, it has placed bids for 8 such areas where not more than 5 other entities have participated. Now, why is this important? Because lower the number of players, more chances of winning that area for Adani Gas. Now, overall, if you see, for the 19 areas, the entities that have placed bids vary in the range of around 2 to 13. Now, for Indraprastha Gas, it has participated strongly after managing to win only one area in the 9th round of city gas auction. Now, in this round, they have placed bids for 15 areas, of which 8 are adjoining areas, that is nearby in Uttar Pradesh and Punjab, which means that there is high chances of potential synergies coming in if they win these areas. Now, also IGL has placed bid for 6 such areas where not more than 5 other entities have placed bids. Now, for Gujarat Gas, if you see, it has put in bids for 7 areas, of which the largest one is in Rajasthan. Now, they currently operate in Gujarat. Now, if they win this Rajasthan area, there could be some potential synergies that would come in for Gujarat Gas. Now, in the last round, they had placed bids for around 21 areas, of which it managed to win only 1 area because of stiff competition. And similarly, similar things have been seen in this round also, because if you see, for the 7 areas that they have placed bids, 6 are such areas where more than 5 entities have participated. So the chances of winning these areas is lower when the final result come in. Now, for the joint venture between Adani Gas and Indian Oil Corporation, if you see, they have placed bids for 7 areas, but for them the competition is very low in 6 such areas. So the chances of winning these areas is very higher. In the last round, if you see, the joint venture had won nearly 9 areas, and in this round they have 6 such potential areas where they could easily win, because the number of entities that have participated for these areas are very low. Lastly, for Mahanagar Gas, if you see, the participation has been muted even in the 10th round of city gas auction. If you see, in the last round they had put in bids for only 3 areas but managed to win none because of stiff competition. And in this round also, if you see the 2 areas where they have placed bids, there's a very high competition because more than nearly 10 entities have participated for these areas. So the chances of winning these areas is lower, and this trend has been continued for Mahanagar Gas, because if you see in the last round also, similar trend was seen for the company.
Oh, let's wait and watch what happens here. Sumit, thanks for putting that into perspective. Aggressive bidding already in a business which is going to be tough and competitive. But, well, that's the nature of the game right now. That's the nature of the game for some of the other sectors like insurance as well. Now, one of the favorite or one of the most preferred sectors for FI investors was insurance. Compared to the free float, the quantum of FI holding was fairly large. With the underpenetrated growth in the Indian insurance space, and that was touted as the key reason for seeing multi-year growth going ahead. However, the last few months have seen a bit of a pullback in stock returns, and most of the stocks are trading very close to multi-month lows or 52-week lows. Let's try and analyze what's the way forward from here for these businesses. Now, just very briefly a mention for HDFC Life, ICICI Pru as well as SBI Life, of the very low free float that they have. 8%, 4% and 8.5% respectively held by FIs. So that underscores the point that I was making, that FIs really love this space or have loved this space. Now the key positives for these companies going ahead, and if we just analyze what's happened in the last 9 months gone by, not really look at the last 3 years, but the last 9 months, the value of new business margin expansion has continued across players, by and large across players, because there is a strong focus on the protection business. That is a high margin business, and that's leading to high value of new business margin expansion. The operating return on embedded value profiles are between a healthy 17% and 22%. For ICICI Prudential, it's about 17%. For the others, scales up all the way to 22%, at times comes off. But that's a fairly healthy band for most insurers. And the individual protection business is growing off a very low base. So while the other businesses are growing, the individual protection business is growing off a very low base, but growing, and which is actually a positive sign. The APE growth for almost all of the insurers has been impressive too. Yes, ICICI Pru had chink in the armor. So if you look at what ICICI Pru did for 9 months, the APE growth was negative 4%. HDFC Life and SBI Life was positive 16% and 13%. I think for ICICI Pru, I remember we spoke about it when the results came out as well, that they're relying on high ticket ULIPs, which are impacting that growth. But by and large, the APE growth numbers have looked okay for the life insurers as well. So how do they stack up against each other, and what could the way ahead be? I've tried to break that down into the 3 more traded listed players, which is HDFC Life, ICICI Pru and SBI Life. So firstly, for HDFC Life, what works for it? As I said, the value of new business margins is very strong. The 9-month growth is similar to what they did in the first half, and that is important because people thought that the last 3 months of December were starkly different from the previous 6 months for ICICI Pru, for example. But for HDFC Life, no such scares. The management is confident of correcting the little margin moderation that we saw in Q3 versus the first half as well. So the positive business tailwinds for HDFC Life continue. What ails HDFC Life, and the reason why it's trading close to 52-week lows? Valuation. It's fairly high. The valuation does not factor in higher tax risk as well as regulatory changes, and the kind of numbers that it is trading at, which is 3 times, and I'll come to that in a bit on price to embedded value. There is little room for people to bet aggressively on HDFC Life, and which is why if you look at the ANR function on the Bloomberg terminal, you will see that it's not that too many people have very strong calls, equal number of buy calls, equal number of hold calls, 4 sell calls as well for HDFC Life. This will change for the others, as you will see. Now SBI Life, what works, or maybe ICICI Pru, let's start off with ICICI Pru first, then we'll get to SBI Life. ICICI Pru, what works? The valuation. What doesn't work for HDFC Life works for ICICI Prudential. It's trading at 2 to 2 times FY20 price to enterprise value or price to embedded value. What ails the company is a subdued Q3. I think that Q3 really spoiled the picture for ICICI Prudential. Muted growth, lower margins. The 9-month value of new business growth was lower due to higher costs as well. However, as I said, if valuations are in your favor, people won't go out and sell your stock lock, stock, barrel. Maybe some of it is already done, and which is why if you see this, the number of buys on ICICI Pru is 22. A stark difference from the number of buy calls that are there on HDFC Life, despite it clocking in fairly healthy numbers. What is wedged in between HDFC Life and ICICI Pru is SBI Life. It is not as much a strong performer as HDFC Life and much better than ICICI Pru. On valuation front, much higher than ICICI Pru, but lower than HDFC Life. So what's working for it? What ails it? What works for it? The VNB margins continue to rise all through FY19, which is actually pretty healthy for SBI Life. The total protection APE share is rising, and the persistency ratios for SBI Life are very, very stable. For ICICI Pru, there was a bit of a dichotomy out there, 13-month versus far out. But for SBI Life, no such issues. What ails, though, is the fact that in Q3 at least, and for 9 months as well, you saw the low-margin group savings business really jump on a YOY basis, and that might just spoil the margin profile for SBI Life, and maybe which is why when the numbers came out, and they were not bad numbers, the stock was at 616 or thereabouts, if I'm not wrong. It's currently at 574, again trading close to multi-month lows. But if you look at the analyst recommendations, they are not as stark as ICICI Pru, not as adverse as HDFC Life as well. 21 buy calls, 1 hold call. The target price is 2, the return potential not as high as ICICI Pru as well. So Mixed bag for these, and frankly, just one table sums all of this up. If you just look at the valuation picture for HDFC Life versus SBI Life versus ICICI Pru Life on 3 parameters: price to embedded value, price to book, and price to value of new business, you will see that HDFC Life is expensive on most parameters, if not all. The only place where ICICI Pru is more expensive is the value of new business, because that's not working for ICICI Pru Life, and that's why that is the one thing that could hurt ICICI Pru Life. Otherwise, on a valuation front, it's starkly cheaper than HDFC Life, and which is why maybe analysts seem to like that more. Most of the notes that I read said that they are bullish on ICICI Pru Life and SBI Life. They do not want to buy HDFC Life on the current valuation. So that's the only thing that works against HDFC Life. There are 12-month performance from each of these not doing all that well. That's on insurance. The next piece is on the 2 results. The 2 nifty names that came out with numbers, or 2 large cap names that came out with numbers. Higher realizations and good cost control helped Coal India report an operationally strong quarter. Nikki Mirchandani is here to tell us the key highlights for the quarter gone by. Nikki, good morning.
Good morning. Clearly, it was a good realization both on e-auction as well as the FSA realization, which aided the operational performance of the company. There's a big beat coming in on those numbers. Top line first, we're looking at the company reported a 15% growth on year-on-year basis, consolidated level. Margins shot up to 27% as compared to 21% against the estimates of around 27% that most of the analyst community and the Bloomberg estimates reported. Profitability was higher by more than 50% for this counter to a number of 4,500 crore versus the estimates around 3,800 crore. So clearly a beat coming in on those numbers. I'm going to first dwell on the volume breakup in order to come to the realizations. FSA volume, we saw an 11% growth out there. Clearly the realization uptick trickled down from the good amount of volume growth that FSA volumes registered for the quarter. E-auction volumes, they were down by as much as 44%. But then the realization of e-auctions were relatively higher on account of the tight supply market and the higher prices that the company hence could achieve, which in turn percolated well in the earnings performance of the company. Total volume was always already reported by the company. That was in fact a flattish growth. So for a flattish growth, you get a EBITDA performance of more than 50%. But then surprisingly, not so surprisingly actually, most of the brokerages have actually maintained the buy or the outperform rating on this counter. But however, they've gone ahead and slashed the target price for Coal India on the ability, on the doubts of the company going ahead and further taking a price hike, because much of these earnings are on the back of the sharp hike that the company, price hike that the company had taken back in Jan 2018.
Okay. Nikki, thanks for putting that into perspective. That's Coal India. Now the next one, tax adjustments and forex gains resulted in Sun Pharma's profit numbers surging to almost 3 times. But the top line too witnessed a healthy growth. Darshan is standing by with the fine print. Darshan, good morning.
So Neeraj, yes, optically it looks like a good number, but you know there are a lot of adjustments that you need to look at it. No doubt the top line was good, a 16% growth that came in. If you're looking at the profit, almost a growth of almost 3 times there on a reported basis. If you adjust for it, all the exceptionals that came in over last year, it's a growth of almost 50%. Margins went in at 48%, EBITDA growth at 48%, which means EBITDA margins at 27.8% versus 21.8%. Now, there are certain adjustments that you need to know. First of all, there was this forex gain that the company had of 300 crores, which they adjusted above the line in the selling goods and administration expenses. So if you adjust for that, the margins comes to 24%. But the other factor is that, you know, the R&D costs were much lower this time around, 6.1% of sales compared to 7.2% of sales last time around. So even if you adjust with this also now, the margins come down significantly. So it becomes an inline set of numbers. The tax rate was much lower at 16% compared to 80% last time because of a deferred tax that they had to pay. So overall, if you're looking at all the numbers put together, the numbers seem to be in line with estimates. The other factor is that India business was slightly subdued, 7% growth that came in. US ex Taro was also not that impressive this time around. So growth mainly came in from the rest of the world market and the emerging world market. The commentary was decent by the management, but nevertheless optically looks good, but it seems like an inline set of numbers from Sun Pharma.
Okay, optically look good, but largely inline set of numbers from Sun Pharma. Thanks a lot for that, Darshan. The question mark only is, what's the stock of the day today? Would it be Sun? Would it be Coal India? Could it be Bata or could it be a small cap iron oil chemicals? A bunch of names that have come out with good numbers, and all of these would be in focus today. We'll talk about them on the other side of this very quick break. That's all that we have on First Word. Lots more lined up for you. We decode the December quarter earnings with Venkat, Narayan of Prestige Estates and Manish Gulati of HEG. But after this break, a full tilt towards the day's trade.
Indian Overseas Bank, the commitment, the recognition, the passion, the trust and excellency since 1937. Indian Overseas Bank celebrating 82nd Foundation Day. Good people to grow with.
Today we are meeting Royston Abel, Theatre Director. Royston believes you don't need words to tell stories. There is no way to describe what Royston does, because what Royston does defies definition. Can you say that about anyone else? To be so fiercely individual, yet create music and theatre so accessible, so easily understood and felt and appreciated, not just at home, but the world over. When he turned his eye homeward, he created shows that travelled the world, bringing it a glimpse of our culture. The Manganeer Seduction, the Manganeer Classroom, 100 Jammers and the Kitchen. Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome. You're watching Indian Open right here on Bloomberg Quint Live. Asia as a pocket is faring well after 3 straight days of losses for our markets. Hopefully we see a positive start, keeping in mind the setup that it is today. 1.5% higher on Nikkei. You've got SGX Nifty that's up about 0.25% to 1/3% higher. Yesterday's session towards the end of trade, Neeraj, obviously it was a disappointment for the last half an hour of trade because the index corrected pretty sharply while the rest of the broader market managed to just about stay afloat. And the breadth also was pretty okay by the end of it as compared to the last few days where it's been a complete thrashing for the mid caps and small caps.
Yeah, but the cues are positive today, Devina, as we were talking about. Well, do the global cues plus the fact that inflation is headed lower and this whole, there might be a reaction on yields as well that we'll see today. So important to see what the Nifty Bank does in the session today. Maybe that could just have a bit of a fillip. It anyways needs one. Yeah. Maybe this could provide that bit of tailspin or tailwind to the Nifty Bank. And let's see what happens then.
So your bond yields, your currency, your banks, at least on that front, you'll be watching out for what the inflation and how it plays out.
Yeah, and the results, right?
And
the results have been pretty strong.
So Sun Pharma, Coal India, and a few other host of other smaller names is what we'll be watching out for. But were there anything specific to watch out for from the derivative space? Any interesting moves that came about from trade yesterday that you should watch out for today? Agam Vakil is joining in to highlight the same for us. Agam, good morning.
Well, good morning, Devina. There are some, well, I would say lack of cues at this point, considering we have seen the Nifty move back into that range. It has moved within for the last 3 months, for that matter. So once again, given the fact that the Nifty is between 10,700 and 11,000 on the higher end, we aren't seeing too much traction with respect to the futures, which explains very little change in its open interest. The Nifty banking futures is also starting to see unwinding coming through very early in the series, which means that while we are seeing unwinding of positions, we are not seeing too much in terms of new positions being taken. The VIX, of course, has also come off by as much as, well, little less than 1%. And it's been sticky around between the mark of 15 and, well, 15.5 and 16 to be precise. And while the range on the lower end for the Nifty continues to move between 10,700 and 10,400 based on the maximum open interest in puts, Max OI in call remains with the 11,000 call. And, that explains what we've seen yesterday as well. A little more writing around the 10,900 and the 11,000 calls, given the fact that the Nifty has come off to a certain extent. And coming down to your other variables, including stocks, Adani Enterprises, IDBI Bank, Deven Housing Finance, all in the F&O band. Is the same for Jet Airways, Reliance Cap, and Reliance Power. And in terms of other stocks, we have NTPC, which is looking at fresh longs, Escorts, looking at fresh shorts, and other stocks which saw unwinding in trade. Mindtree stands out, given we have seen some pressure come through. On the other hand, Balkrishna Industries is looking at fresh, rather short covering. So keep an eye on these stocks, but it has been a mixed day of trade, and that is something that we are expecting as we move into trade today as well.
All right, Agam, thanks very much for that. That's a quick F&O wrap-out of yesterday's trade and setup for today's trade. Pankaj Pandey, Head of Research at ICICI Direct, is joining us on the show right now. Pankaj, good morning to you. And I'll start off first with, obviously, the big one that reported numbers post-market hours, and that's Sun Pharma. In the spotlight for all the wrong reasons up until now, but the numbers seem pretty okay. Optically above expectations, but if you adjust for all the other aspects that they had, their deferred tax, their forex gains, which they included, it seems to be in line. Do you expect any, major uptick on the counter or any re-rating as such?
Hi, good morning. I think in the pharma space, if you look at overall numbers have been better than the overall estimates. For Sun Pharma, I think the numbers were in line with our estimates. But I think since the investigations are sort of still going on, I think that will sort of prevail over the decent fundamentals which the company has. Within pharma, we like Biocon, DRL, Divi's Laboratories. So these are the names which we prefer. IPCA's numbers were quite good. We'll have to look into con call details in terms of what company does. Or discloses because the margin was a big surprise in case of IPCA.
If you take a pocket like IT right now, after 8 straight days of gains that we've seen on the IT index and the uptrend that the entire space has seen since mid-January, we've seen a little bit of a profit-taking session yesterday. Will you continue to buy into IT? And if you demarcate between your larger IT names and your mid-cap pocket, where would you tilt?
So in IT overall, so within tier 1s, we are quite positive on Wipro, wherein we expect that the company would do a catch-up or is catching up on growth front. And we would expect valuations to sort of catch up. So that is one. Besides that, I think Tech Mahindra looks attractive to us. I think overall within defensives, IT should do well till elections. I think that is what has been sort of panning out. I think post elections we would expect broader markets to sort of perform. But till that, I think IT and other defensives such as pharma and FMCG should continue to hold ground.
How did FMCG do for you this quarter with regards to the volume numbers from majors like HUL, ITC? You had Bata numbers also getting reported, obviously not in the same staples category, but still from an FMC, from a consumption point of view.
So largely, if you look at within the FMCG, the overall volume growth has been pretty robust. Even for HUL also, we were expecting about 8% kind of a volume growth. The numbers were quite good. I think next quarter also we would expect decent set of numbers with margin profile could become slightly better. I think on the paint side, so if you look at probably this quarter did not see the kind of margin expansion, but we would expect that that should sort of pan out. And volume growth should sustain given that there was a GST cut, so which is why I think paint looks attractive from that perspective. I think on Bata, the margin profile has definitely been a big positive surprise. While the stock is at 52-week highs, so we would expect that largely that would be sort of maintained. I think some of the other interesting things which we have seen is that Indian hotels had come out with good set of numbers. There's a good amount of margin expansion, especially on the domestic side. Surprisingly, international businesses also did well for them. We also liked TCI Express. I think the management commentary is pretty robust in the con call, wherein they're saying that they would look to double their top line in the next 4 years. and bottom line could sort of improve 4x going forward. So I think within mid caps, you're getting sort of interesting names in terms of growth going forward. While we don't expect to sort of expect a rally in prices, but I think post elections we would expect some of these names should do well going forward.
Okay. Well, interesting, and I'll talk about TCI Express in a bit as well. What did you, I mean, because the commentary obviously is looking robust, but I just wanted to first take a call from you on Coal India numbers as well. PSUs largely untouchables, Pankaj, not too many people love to look at them. The numbers from Coal India are quite spectacular, really. It was a solid quarter. What did you make of it? And is the quarter good enough for you to go out and buy this stock, which typically has been bought only as a dividend yield play?
Neeraj, you're right that the stock is quite cheap and has always looked at it from a dividend yield perspective. But I think the sales volumes are still sort of tepid, and I think for us, growth is paramount when we look at a stock. I think which is where you need to look at a combination of both volume as well as pricing growth. Now this quarter pricing did help them, but structurally I don't see much of a change going forward, and given the fact that if you look at this year, we hardly had any additions in terms of thermal power capacity addition, and even the tendering and ordering activity is tepid. So which is why structurally we are not positive on the entire mining as a space. And Coal India, I think one should not be really sort of looking at beyond dividend yield perspective. I don't, so it's not a part of our portfolio, and neither we intend to sort of include in our portfolio.
Okay, so that's as far as Coal India goes. The other one, and that's a Bloomberg Quint exclusive, Pankaj. Wonder what do you believe the reaction could be on JSW Steel, if any? It's been declared the winning bidder for Bhushan Power and Steel. Now the question is, therefore the others go out of the fray. JSW will have some balance sheet load coming in as a result of this as well, but it's something that they wanted to. How do you view this development for JSW Steel and for the others who were in the fray but no longer in the fray now?
So I think within the entire metal and mining space, ferrous looks relatively attractive to us, and I think we'll have to see how the Chinese demand pans out post 14th Feb. So we would expect ferrous prices to slightly get firmer. This particular quarter we were expecting softer EBITDA per ton for both Tata Steel as well as JSW. In fact, the numbers were on a positive surprise. Possibly next quarter, because of higher and higher prices, JSW could witness some bit of a margin contraction. But I think given the way they have, both the companies have participated in the M&As, I think if the steel prices hold up for the next 2 years, I think these both the companies look quite attractive. Within the two, our preference is largely for Tata Steel. I think if the prices hold up to for next 2 years, I think the companies can deleverage significantly and can do very well from an overall price performance perspective. So we are quite positive on Tata Steel compared to JSW.
All right, that's in the metals pack. Pankaj, just stay on with us. Lots more to discuss with you, and we'll bring in our technical experts also. But in the meantime, let's just go across to our research team. They're standing by to highlight some stocks that are in the news that could possibly see a reaction. Some brokerage calls that have come in, and Bharat Forge reports numbers. So a preview of that. I'll start off with you, Nikki, first, and some stocks in news.
Yeah, 5 numbers that I'm tracking. All of them, most of them are steady or better than expected. I'm going to start off with Indian Hotels, which has reported in line with estimates number 50% uptake on the bottom line performance of the company, clearly aided by exceptional gains. However, the operational performance of the company too was strong enough. There was a significant improvement in the performance of international subsidiaries. Apart from that, there was a pickup in pricing growth in December and January, which was the key positive for the company. Bata India, which again delivered a beat. In fact, EBITDA we saw of 46% 8% uptick, mainly driven by the cost control measures which were undertaken by the company. Revenues too were aided by the robust festive sales and campaigns, and also saw some kind of expansion of 50 new red concept stores. That's a Q3 expansion that I'm talking about. Jain Irrigation, well, it was a nothing sort of a quarter. I mean, margins pretty much around that 10.5% kind of level. Top line 9.5% growth, and the profitability of the company shot up by 23%. JK Papers, that was steady quarter coming in for the company on back of the improved demand and the curtailed input cost scenario, which in turn led to good show by the company. Top line 10% growth, bottom line performance too was in line with top line, and EBITDA we looked at a 21% uptick there. IOL Chemicals and Pharma, now that's one good set of numbers reported by the company. That's a strong show, not only just on top line growth, but also cost control measures have aided the performance. Look at the revenue number. It's an 82% jump out there. Profitability is too higher by more than 9 folds. That's mainly on account of the healthy operational performance. The number on your screen is more than 4 times higher. 135 crore compares to what we've seen 32 crore in the corresponding quarter of the previous year.
Right, Nikki, thanks very much. Bharat Forge reporting numbers today, Yathin.
The auto ancillary companies have been facing some margin pressures. Not only that, for Bharat Forge, this time there is slowdown in the US business as well. So despite all of that, we are expecting the shipment tonnage for Bharat Forge to increase by 10%, and that will probably drive the revenue growth this time for Bharat Forge. Also, if you look at the EBITDA margin figure, we are expecting a contraction of 100-200 basis points on a year-on-year basis because of lower volumes and headwinds because of higher raw material cost. As far as profitability is concerned, this time again there would be growth seen. But the management commentary on the US business and the Class 8 truck order trend is something important that we will be watching out for, because nearly 20 to 30% of the total business comes in from North America. And if the Class 8 truck orders are slowing down, there is slowdown in the oil and gas segment there, then there could be some evident pressures on the revenue growth. So these are the few questions that we'll be asking for the management in terms of guidance. But net expect a probable 15 to 20% kind of a growth for revenues as well as profits for Bharat Forge. Most important being the outlook for the North American markets.
All right, Yathin, thanks a lot for that. And some brokerage calls this morning.
Well, Jefferies has come out with this note on Voltas where they have maintained their buy rating on the stock with target price of around 715. Now, the brokerage says that 2018 was a washout year for air conditioners as the weather was not sustainably warm in the summers. Now, in 2019 also, if you see, the weather so far has been cold with unseasonal rains and snow in North India. Now, typically temperatures begin to rise in February, but so far it has been cold because of the snow and the unseasonal rains. Now, along with that, the electricity demand has also been impacted because of lower household consumptions given a delayed summer that we have been seeing in the North India. However, on the positive side for the industry, the channel inventory has reduced in the past 6 months. So if you see, there are a lot of moving parts for Voltas in play here, and the brokerage believes that the third quarter results that will be out tomorrow and the weather patterns over the next 2 weeks would be a key, it would be a very critical and the key watching points and a catalyst for the stock of Voltas over the next 2 weeks. So we'll have to keep an eye out for the Voltas stock according to the brokerage.
Okay, great. Thanks, guys, for that. So there are lots many stocks to keep an eye out on. Pankaj, keep it with the auto ancillary space with regards to what this entire last 3-4 months have been for the auto pocket and the implications of that for the ancillary space. And if at all you've made your own, expectations from Bharat Forge, what would those look like?
So for Bharat Forge, this particular quarter we are expecting about 12% kind of overall top line growth, since there would be a margin contraction. So we would expect EBITDA and bottom line growth to be in single digits. Similarly for Bosch also, we are expecting an overall muted set of numbers. I think there's definitely a global slowdown in the auto sales, and I think in countries like China, the trend is slightly disturbing given the fact that the EV sales have been picking up quite well. So those are up about 60-odd%, whereas the petrol or diesel vehicles are taking a knock there. And I think US also as a market is seeing a fair amount of disruption from EV players. So given all this, I think the outlook looks challenging for a lot of auto as well as auto ancillary players. And given the fact that most of the Indian companies are slightly behind the curve in terms of technology, So we are quite cautious on auto as an entire pack, and which is why we don't have a buy, and in fact we expect the entire sector to sort of keep underperforming for the next 1 year.
Okay. Well, stay on. So much more to talk about. Pankaj, let's try and analyze the charts as well and the trading pattern, and let's get in our technical and derivative experts on board to try and figure out how to trade a day like this today. Let's start off with Chandan Taparia of Motilal Oswal Securities. He joins us right now on the show. In a bit, Manav Chopra of Indiabulls Ventures will also be with us. In fact, he's with us as well. Gentlemen, both of you, good morning. Thanks for joining in. Chandan, let's start off with you. How are you approaching trade today? We are likely to start off about 1/3% in the green. Would you build on to long positions post that?
Very good morning. We have seen selling pressure in the market in last 3 trading session, and market has been forming the lower highs, lower lows. Just a couple of days back, it gave the breakout beyond 10,985, headed towards 11,118, but again the breakout was not sustainable. But what I feel that from last couple of trading sessions, whenever it comes near to 50-day MA or 10,777, 10,750 zone, somehow the buying interest emerges, which takes us to 10,929, 985. At the same time, even after the decline in the market, volatility is just hovering below 16 zone. So somehow decline could be bought and range bound move could be there. And the way it is corrected from high levels, I'll go with bargain buy. So I'll put a stop loss near to 10,777 and we'll play for an upside bounce towards 10,929 in the market.
Okay, Manav, what's your approach to trade today? With the assumption that we start circa 10,900 odd, what's the trade that you would initiate on the Nifty or maybe the Nifty Bank, which could be active today?
See, the markets have actually seen a good decline from its recent peak, and most importantly, the data that we've analyzed, most of the bulls seems to be arrested at the high levels, and in such a scenario, when the weekly supports are breached, we usually see this retest of its previous support level. So I sense at the near-term basis, the support of 10,750 is likely to be tested. And this gap up opening for a very short-term trading perspective can be looked to initiate of fresh shorts. On the upside, the resistance would be at 10,950 on the upside, and that would actually provide also a good risk-reward ratio. And this short-term trade can be initiated only for a period of 1 to 2 trading sessions. Even for the Bank Nifty, it has actually witnessed a sharp sell-off yesterday, and the volumes that was confirmed on the breakdown, it clearly indicates that we could see some sort of more selling pressure in the near-term perspective. On the upside, 27,200 remains a very strong resistance for the Bank Nifty, and I think for the near-term perspective, Bank Nifty would add a lot of selling pressures, particularly coming from the PSU banks, the kind of a decline that we have seen after a fresh breakdown in most of the PSUs. So for the Bank Nifty, 26,600 are the supports, and eventually those were the levels that we expect the immediate targets to be achieved. On a broader term perspective, the overall trend remains neutral to positive, but this is a short-term strategy that we can initiate with a strict stop loss.
Okay, let's pin it down to a few stocks then, and Chandan, let's start off with you.
Yeah, selected to go with the counter which are comparatively holding this strength. First is buy on Titan. This stock is continuously making higher tops, higher bottom formation, has been consolidating from last 3-4 trading session even after the decline in the broader market. So overall strength is there, stock is entering into lifetime high territory again. So recommending to buy with a stop loss of 1,045, and here we are expecting it to move to us 1110, 1115 level. Second trade, there is buy on Raymond. This stock has formed a small symmetrical price formation on the lower degree chart and narrow range price formation. And after the weakness of last 6-7 weeks, it is finding some support and buying interest at lower level. So just because of the short covering, we are expecting some sharp up move towards 730. So recommending to buy with a stop loss of 685 to play the upside moment of 3 to 4% as short covering activity. One more trade, that is sell on SBI. This stock has been finding multiple hurdle at every small bounce back move, and bounce are being sold. It has given the lowest daily closing, and 280 put started to see unwinding and fresh put writing shifting lower with call writing activities. So here one can continue to be on the selling side by putting a stop loss of 282 for a downside target towards 265 levels.
Manav, you've got a buy call on NCC. Yesterday, the stock did really well, reported a robust set of numbers, and the management also spoke to us. And you're selling Shriram Transport Finance.
Yes, looking at the charts for NCC, the prices have actually declined from its recent peak of 94, and the kind of a reversal that the stock witnessed yesterday after a good short-term consolidation. The volume breakout was also after good 2.5 months, and it has been above 100-day average volume. So it clearly indicates, at least for a near-term perspective, a bottom is in place, and a closing above its crucial long-term averages is further indicative for it's a good retracement move. So even at the current levels, the risk-reward ratio is quite favorable. We recommend a buy into this. A stop loss of 81 on the lower side for an upside target of 90. Shriram Transport Finance on the other side, has witnessed a breakdown from a short-term rising trend line, and overall the stock has been in a downtrend, forming a series of lower tops and bottoms. And if we look at the weekly and the monthly structure, it looks quite weak since the momentum is still on the negative side, and with the breakdown on the with the original trend, I sense on the near-term perspective, we could likely test its recent lows. So one can initiate a sell with a stop of 1065 for a lower targets of 1010.
Okay. 850. So those are some ideas. Now the time for our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. So we are tracking United Breweries on the charts, and a buy signal coming in on the back of the stochastics indicator. Let's first try and understand what the stochastics indicator is and how do you interpret it. It basically helps identify when a price move is overextended, as it measures the current price relative to the highest highs and the lowest lows. How do you interpret it? Overbought and oversold. Overbought is above the level of 80, oversold is below the mark of 20. Any crossover that indicates a buy or a sell. Now coming to the chart of United Breweries, and the lower panel is where the stochastics indicator is. The blue line over here that has crossed above the white line, and it has generated an early buy signal as the crossover has taken place below the mark of 20. So below the oversold mark, the crossover has taken place. Also, what we saw on the charts is that after 6 straight days of losses, we saw a positive move on the upside in yesterday's day of trade, and with that the stochastics indicator seems to suggest that there could be further upside from these current levels when it comes to United Breweries.
All right, and how well has this worked in the past, Yash?
So Devina, 2 out of the last 4 times that the indicator has turned positive. The return potential on the upside for the next 10 trading sessions is as high as 6%.
Oh, that's not a bad bet. Thanks a lot for that, Yash. Well, for a deeper insight into Indian equities, visit BloombergQueen.com, where we identify technical triggers that have emerged in a specific stock or sector every single day. On today's Bloomberg Edge, we feature IndiaSun Bank and what its open interest and stability charts indicate. That's a BQ Blue exclusive. Chandan, within the banking pack right now, I mean, while we've spoken about the bank nifty as such, individual counters, and you're selling SBI, but within the private sector banks, is there anything that is opportunistic right now for a buy?
See, first, talking about the bank nifty, it has been consolidating in a range. Even in the last week, it drifted to 26,825, then managed to recover and settle near to 27,350 kind of zone. So expecting the similar kind of setup. Downside supports are likely to be at 26,850, while on upside again it can attempt towards 27,300, 350 next 2 trading session. So expecting that kind of settlement for the weekly contract bank nifty per se. Now talking about the private banks, comparatively we have positive on the SDFC Bank and Kotak Bank. However, both are the low beta comparatively in this recent market, but yes, the supports are being respected and the supports are slightly shifting higher. So comparatively having positive on the Kotak Bank, but we'll wait for some decline towards 1275.80 to build the position for an up move towards 1330. We have positive on the SDFC Bank as well. However, SDFC Limited fell down sharply, but SDFC Bank again managed to hold. And the pair trading and the stats suggest that SDFC Bank could see some outperformance by 1.5% to its pair. So the stock is also finding some support. It has multiple support near to 2110, and looking at support, it can again move towards 2180, 2200 kind of zone. So ICICI Bank and SDFC Bank are two counter, which are Kotak Bank and SDFC Bank are to counter, which are comparatively showing sign of the strength, while Yes Bank is showing the sign of pause in the selling pressure, but yet not given the reversal from the immediate negative trend.
Okay. Pankaj mentioned a few numbers which he was speaking about briefly. Pankaj, now you mentioned that Bata, the valuations are expensive, but does the quarter instill confidence that there could be a renewed leg of growth which could make business do well, irrespective of what happens to the stock? And and therefore, is Bata looking like a play which is doing things slightly different than the others? Because I don't think the other footwear companies have quite managed to do what Bata has done in this quarter.
You're right, Neeraj, that Bata has been sort of doing very well compared to the relative peers. See, I think overall retailing as a space also looks quite attractive. When you look at Titan, where the organized share is about 20% you look at apparel space, where the organized is about 15% So good companies have got a lot more room to sort of cover going forward, and I think Bata has been sort of surprising on the margin side, and they've been sort of filling the product gaps, which is quite good, and which makes us believe that probably the growth rate is going to be sustained, and I think with a better margin profile. So which is why we don't expect there would be a correction in the stock, but the stock is definitely expensive. I think the market is clearly favoring stocks which are delivering more on the growth front compared to stocks which are sort of cheap. Coal India is a classic example. The stock has been cheap for quite some time, but hasn't been sort of delivering in terms of price performance. So I think that will sort of still pan out. Even the same is case with Titan also. They've delivered one of the good set of numbers. You have a merit season which again looks quite good. So I think that trend in terms of favor of organized retail, I think is clearly panning out across segments.
Well, looking solid thus far. Let's wait and watch what happens to Bata India in the session today. There were a clutch of other names which came out with numbers. The one that kind of came out with a mixed set of numbers was Prestige Estates. What did you make of these numbers, Pankaj? Revenues were down, PAT was down. Yes, there was a decrease of inventory in the base quarter, and therefore that may have gotten impacted this too. But the operational performance looked heartening. How would you read Prestige Estates numbers?
So Neeraj, don't have a view on Prestige, but I think we like something like Phoenix Mills, which is again a proxy on consumption, and I think structurally we expect that the company will keep doing well. I think the malls across cities have been doing well in terms of occupancies, plus there is a decent expectation of rentals sort of going up. So I think that is one which we like. But within real estate, I think Bangalore-based real estate players have been doing relatively well, especially the commercial real estate. Otherwise, we are still sort of not really going full hog, because I think there is an expectation that if the government reduces the GST to 5% then possibly the companies will not be able to take input tax credit, and since they will not be able to sort of pass on the prices, so they might have to take some margin hit. So which is why we believe that probably in the medium term companies may remain under pressure in the real estate.
Okay, so do watch out for some of these names as well in the session today and over the course of the next few days. Well, about 2.5 minutes left for the markets to kickstart today. It will be important to see what happens to a couple of pockets, including the ADAG Group stocks have been active the last few days, so do watch out for those. And HEG and Graphite India. HEG went at 8% in trade yesterday, but if I look at the Macquarie note, and I think the conversation is coming at about 940, 945 on Bloomberg Quint as well. There are some possibilities of margin pressures ahead, which might keep the stock under check, or both these stocks under check.
Yeah, but yesterday's divergent moves was on the back of HEG's numbers. Graphite disappointed the street. It had reported numbers, I think, a week to 10 days ago, and the numbers weren't all that flattering, and the stock did what it did post that. Since we were on the topic of real estate, just to get a sense from you on any trading opportunities, Chandan, within the real estate pocket, be it an Oberoi Realty, be it Godrej Properties, Phoenix Mills, Prestige Estates, anything there that looks attractive?
See, we don't have much coverage on the realty counter because we have seen much cold writing if I look at the data point of view. But comparatively, Oberoi Realty is in mind. We have coverage on the same, and stock has multiple support near to 430 zone. And from last 8-9 weeks, the support is being respected. So I think till the support is held, some bounce could be seen, which may take it to 465, 470, and the trading range is in between 430 to 475.80. So it is trading near to the lower band of the trading range. So looking for some buying interest in this counter. However, volume is comparatively lower if I took the comparative basis of the other real estate. But yes, as of now, till 430 is respected. I'll trade for the positive bounce back move up toward the upper band of the range. Looking at the other counter like DLF or other, most of these stocks have seen built up of short position, and I think limited upside could be there in these stocks.
Okay, aside from Nobro Realty, nothing much that you can spot there on the real estate space. 30 seconds left to go for market pre-open. A setup looks ripe for a stronger start. At least the rest of Asia seems to be supportive. Nikkei 225 up 1.5%. You've got Shanghai up about 0.5%, and so is the Hang Seng chipping in. SGX Nifty has improved a little bit more, 33 points higher, inching in back towards the 10,900 mark, right now at 10,894. Pre-open ticks on your screen, about 1.5% on the index, but that will cool off, and the Sensex about 0.5% higher. Not to go by these early morning ticks. Sun Pharma gets that leg up. Again, 10% move may not hold, so you're going to wait for a few more minutes before you actually read into any price move on the counter. 480 right now. Coal India also 10%. Both these companies reported really strong set of numbers. Adani Ports up 1.7%. Reliance Industries at 1274. That's up 1.5%. M&M moves up. You've got Ultratech Cement, BPCL, Cipla are all gaining ground. Axis Bank is up 1.1%. Looks like a strong start on the index. A lot of gainers. Bajaj Finance up about 30%. Indiabulls Housing, TCS, Vedanta, Kotak Mahindra Bank all in the green. A handful of 6 to 7 stocks in the red, with the worst performer being Z, which is down about 3.5%. Coal India cools off a bit. Now is up by 5.8%. But Sun Pharma still purchased strongly at about 10%. Interestingly, the rupee strengthens a bit more. Yesterday's session saw the rupee close at 70.71, and it started stronger as well. 70.45 is where the currency is trading at. The 10-year bond yields have not really moved much as yet, so still at about 7.35.
Yeah, that equation hasn't changed. One would have thought that there could have been a bit of a reaction. That was the talking point on social media as well today. But let's wait and watch if during the course of the day there is a movement out there. Remember, if the bond yield spiked too much, then there is this beast called Reserve Bank of India there with the OMO. So the spike was not expected. But let's see if indeed there's a bit of a cool off on the back of these numbers, CPI numbers. We'll get in Vivek Rajpal in just moments from now. Just while we wait for that, I want to mark a couple of stocks before we get into the bond yield discussion as well and the inflation print discussion as well. Just want to talk a couple of numbers at the broader end of the spectrum. IOL Chemicals should come up on your screen. Let's see if that is reacting at all to the numbers. 9% higher. Sun Pharma Advanced Research 7.5% higher on the back of what Sun Pharma has done. Early days as yet, might change, but looks okay. Bata India should come up on your screen. Again, strong set of numbers. Is it reacting to at about a couple of percentage points? Maybe valuations come in the play of Bata India. And Prestige Estates had a mixed quarter. Let's see if it is reacting at all. The margin picture was okay, but the revenue numbers weren't the most solid, and that stock is marginally soft. United Bank seems to be doing okay, up about 11%. But banks could be the order of the day. Yields are not reacting thus far. The Nifty Bank will get to know about 8 minutes as well. Let's talk about the yields and the currency with Vivek Rajpal. He's Asia rate strategist at Nomura, joins us right now on the phone line. Vivek, good having you. Thanks so much for joining in. I'm guessing the CPI print would have been lower than what your estimates would have been as well. What do you make of it, and how does this add to the clamor about the rate action from the Reserve Bank of India going ahead?
Absolutely. I mean, headline inflation definitely surprised on the lower side. And I think the debate during the last monetary policy meeting was between really headline inflation and core inflation. And because core inflation also came down, it adds to the probability of April rate cut. Market should assign a very high probability for an April cut after yesterday's inflation print.
What would bond traders be doing now, Vivek?
So I think yesterday's print is quite positive for the bond markets because the market is now likely to take terminal rate expectations lower, which will push bond yields lower. So I think after yesterday's print, market will be adding duration in their portfolio.
All right, and I think they've already started to cool off now at 7.3 for the 10-year yield that we've got. Vivek, just to weigh in on over even the IIP numbers that came in yesterday at about 2.4 odd %. They were not bad; they were steady. While the obvious, conundrum last time around when the rate cut happened was that this would be just probably a one-time affair and then would be data dependent going forward. What is the probability that the community assigns now to the number of rate cuts, if at all, they do come about in April?
Right. Absolutely. I think that's exactly the question that market is asking itself. Yesterday's print all of a sudden makes RBI look much more smarter because, as I said last time, after the print, the worry was that the core inflation is sticky, and market was keenly watching how the inflation pans out. RBI cut rates and actually even reduced the CPI inflation forecast. And with this CPI actually surprising on the downside, all of a sudden what the RBI did looks very right, number one. Number two, it definitely increases the chances of an April cut. And I think market is now assigning, and one should be assigning some probability that there can be more than a 25 basis point of a cut beyond April. So, as I said, overall, what yesterday's data has done is it has put a downward pressure on bond yields, or let me put it this way, it has now opened up the possibility of a lower terminal rate expectation, which should be seen positive for the bond markets overall.
Okay, Vivek, just one final question, and I know you briefly alluded to this, but is core at a risk of falling below estimates? Thus far, core has been sticky while the other inflation print details have been lower. Is core at the risk of falling below estimates?
So that is exactly what one needs to see. I mean, the stickiness in core inflation in the last few readings was primarily because of some idiosyncratic factors like rural health and rural education component. But in the latest reading, we didn't see that continuing. So from that perspective, it's a much bigger relief to the market that core inflation has fallen. We have seen a fall in core inflation even in yesterday's reading. So, I think headline will go higher, but one cannot ignore the possibility that core will fall further from current levels.
Yeah. Vivek, we'll leave it at that. Thank you so much for taking the time out and summing it up for us. Really appreciate your time.
Thank you.
Well, do watch out. The Nifty Bank would be an interesting one in focus today. By the way, 8 minutes have settled. And as those 8 minutes have settled, the 3 or 4 names which stand out include Sun Pharma and Sun Pharma Advanced Research, naturally so. At the broader end of the spectrum, IOL Chemicals. And at the mid-cap end of the spectrum, Indian Hotels. Okay, that's changing as well. Indian Hotels should come up on your screen. It was up 4%. Okay, still up about 4%. Pankaj, Pandey, 2 names. You spoke about Indian Hotels briefly. A lot of viewers tuning in now. And people would be wondering whether this quarter or the previous few quarters' performance, does it lead an expert to believe that Indian Hotels might be a company worth investing in? So let's start off with that first, then we'll get to IOL Chemicals.
So Neeraj, we have a positive view on the entire pack, not only Indian Hotels, as part of our one of the portfolios also. Now, so what we are been sensing is that see the overall demand growth has been at about 6.5%, whereas the supply is at about 4 to 4.5%. and which is why we would expect that structurally occupancies and ARRs should improve. Now, your second half is quite important for them because my 60% of the revenues typically come from there. And so which is why even next quarter also we would expect a good set of numbers. I think this quarter again what we had been looking for is the kind of a margin expansion. So domestically we have seen about 200 bips kind of a margin expansion in hotels. Overseas did well, which was not the expectation, but largely our thesis is more on the domestic side, and which is why I think the entire pack looks quite attractive to us. We haven't seen that kind of a price performance, and which is why we believe that these are all good entry points for the next 12 to 18 months.
Okay. Just stay on with us, gentlemen. We're just minutes away from market opening, and we'll tell you all that you need to know to stay ahead in trade today. In Nifty earnings, which came yesterday, Sun Pharma and Coal India reported steady earnings, surpassing analyst expectations. Both stocks trade in the green.
Among companies in the broader markets that have reported numbers, Indian Hotels, Bata India, JK Paper and Jain Irrigation reported strong earnings for Q3.
The government's share sale in Axis Bank witnessed a blockbuster start, with institutional investors putting in bids worth over 8,000 crore rupees by lapping up 2.56 times the shares reserved for them on the first day of the offer for sale.
Alembic Pharma's arm receives abbreviated new drug application approval from the US FDA for tablets used in the treatment for cardiovascular diseases.
And the Reserve Bank of India has imposed a penalty of 1.5 crores each on Allahabad Bank, Bank of Maharashtra, Oriental Bank and Indian Overseas Bank. It has also imposed a 1 crore penalty on Andhra Bank. The penalty relates to not adhering to guidelines on monitoring end-user funds by borrowers.
And in key brokerage calls, CLSA has hiked target prices on NCC to 140 from 135, maintained a buy rating on improving state capex visibility and an asset-light model. Frankly, that company was fairly optimistic in its commentary yesterday as well, Devina.
Yeah, and the stock did what it did, almost 6% higher by the end of trade. I think we've got a positive call. I think Chandan's got a positive call on NCC or with an upside target of closer to 90 odd. Let's take a look at some of the other names there. And while we are talking about some of the bigger names, Bajaj Finserv not bad at about 6,165. That's up about 1%. And over the last few days, has not been doing all that badly. Yes Bank at 173 now. So picked up from the lower end of about 170 and started to move up again. Manav, for a Yes Bank, would there be any sort of a trade on the upside now that we've seen it move to the lower end of the range that it generally trades in?
See, yes, the prices have actually seen a steep decline from its peak of 245, and it has entered into its deep oversold levels. But the prices can tend to be at the oversold levels until unless there is a reversal. So I sense that until unless we don't see a breakout above the 180 resistance zone, there may not be any sharp momentum built up coming to this, and the stock will continue to witness selling pressure. So any trader should only enter once if the prices exceeds 180 on the upside, and that would probably give a throttle towards the levels of 195. But again, this has to be a very short-term trading opportunity, and if a breakout on 180, the stop loss should be at 174 on the lower side.
The top gainer today in the broader end of the spectrum is IOL Chemicals. Certainly shows what the API players are doing. Deven Choksey is with us. Before we talk about the market parlance with him, Deven, just a quick thought on some of these API-related entities. IOL Chemicals is a case in point, but some of the others too have done really well for themselves. Good morning to you. Do you track any of these companies in the API space, and do you like them? And do you as a house track IOL Chemicals specifically?
Yeah, good morning, Neeraj. No, we are not tracking IOL Chemicals, so I think unable to comment on that. In general, the business condition, I think, as we gather from most of the players, I think has remained good, and probably, in fact, I think out of total 28,000 kind of odd manufacturers of pharmaceuticals, I think medicines in the country, including the bulk drug, including the formulations, I think you find that I think many of these players are confirming that the intermediaries are having relatively better time at this point of time. Not too sure whether I think everybody squarely enjoys the margin out of that, but in general, I think from the discussion that we have and we gather from them, I think they confirm that yes, I think they are having in general a better time as far as I think the industry outlook is concerned. Since I don't track IL, so I won't be able to give any particular comment on this company, but I think would think that the better time for pharmaceutical space in particular, I think should be seen going forward for most of the companies hereafter. At least the frontline ones, I think, which we are tracking, I feel that I think the time is relatively better. Sun Pharma's result, of course, along with Taro, I think is suggesting that the situation is improving. Even Cipla's commentary probably said that I think they see the improvement happening. So certainly, I think we feel that
we'll do it after market.
The pharmaceutical space, particularly the frontline companies, should have a little better.
Okay, we'll take in the top call from our technical experts post-market open. We're just 15 seconds away. Request both Chandan as well as Manav to stay on for giving the top calls, and then we'll let them go. But 11 seconds for the markets to kickstart trade. We'll start off in the green, remember, a lot of result reactions that one should be watching out for in the session today, both large cap and mid cap. But here are the first trades in the green for all the three key indices. That shouldn't be a surprise. The question is, can they extend their gains? 0.5% for the Sensex. Now the Nifty Bank, a bit subdued really. It's not quite reacting very strongly. Watch out for PSU banks in the session today. Nifty about 47 odd points. So yeah, positive start, nothing too dramatic, in line with what was estimated. The mid cap and the small cap end of the market was actually reasonably positive yesterday. For now, starts in the green. Let's wait and watch what happens here. The mid cap index, remember, was in the green in trade yesterday. But let's get the heat map up on the screen and see what's moving and what's not. Should be a lot of green. Yep, a lot of green, very little red, not too many losers. Let's talk about the gainers. Sun Pharma 3.5% higher. There's gains in ITC in the session today, so good going. Coal India reacts to its numbers, and not surprising. By the way, yesterday was up 2%, adds another 2% to itself today. So good show by both the index names which came out with a reasonably good set of numbers. And TCS is up marginally in the green. Reliance Industries marginally in the green as well. That was that bit of a support yesterday. Otherwise, banks and IT by and large were off. In today's session, not too many losers. The only concern would be select two-wheeler names. Hero MotoCorp was down yesterday and continues to grind lower in the session today as well. So a lot of green. The result boys reacting positively. And a lot of trend makers too. Speaking of trend makers, just a couple of things that I want to highlight before I hand it over to Devina. Firstly, the list of stocks which came out with an impressive set of numbers. Let's see how they are reacting in the session today. Bata, not so much, about 1%, 1.5%. IOL Chemicals, about 11% higher in the session now. And Indian Hotels, about 3.2% higher. So good start to the trading day for the result boys. What about a couple of other newsmakers? Stocks which are trading near 52-week lows, are they bouncing off? Well, marginally at that, nothing too dramatic in the auto ancillary names as well. And lastly, HEG and Graphite India in focus. Interesting brokerage notes as well. But I guess that the management commentary would be in focus. We'll hear from the HEG management at about 9:40 today. The stocks slightly lackluster in the session today as well. Devina, what are you spotting?
We start off with a few names in the real estate space. So DB Realty for one is up about 4% in the session. Smaller name, 22 odd rupees on the counter. Following what Sun Pharma has been doing, Spark is up 3.7% at 162. You've got Engineers India, which is up about 3 odd percent. Sri Renuka Sugars, that's up about 3 odd percent. We've got Deven Housing Finance, 2.8% higher. NCC continues to move up further, another 2.5 odd percent. From the fertilizer pack, and RCF is doing okay for itself. Oil India at 174 now. That's not all that bad. VIP Industries, KRBL is up 2%. You've got J Kumar Infra, Everready at 206 is up 1.5%. Jet Airways in the F&O ban period, so no probable new fresh positions there, but still trading higher in the session. Avanti Feeds 1.5% higher. BF Utilities 1.5% higher. Jindal Saw 1.6% higher. NHPC at about 24 odd rupees is still trading with positive gains. Before we go to our technical experts, just would like to thank Pankaj Pandey for his time on the show. Always a pleasure to chat with you, Pankaj. Thank you so much. Coming to you, Chandan. First off, your top call for the day. We couldn't take it before opening. So just quickly, if you could run us through your top call.
Yeah, we have discussed about Titan, where we are looking for an up move towards 1115. We also discussed about the Raymond. And I think if someone wants to add one more trade, then that will be the Reliance with a stop loss of 1250. And here we are looking for an up move towards 1300 levels.
Okay, that's Reliance Industries. Manav Chopra, what about your top call?
I'll continue to maintain a buy with NCC. The stock has already witnessed a good gap up opening, and it has been sustaining its important support levels. I sense even on the intraday basis 90 is a possibility, but for a positional trade I think the mean reversion can take it to 95. So it still has a good risk reward. Continue to maintain a stop loss of 81.
Okay, and what about the index strategy? Manav, I'll come to you. 0.5% higher for the Nifty. Would you is it looking buoyant enough, or would you bide your time?
I see, like I mentioned, this gap up opening, unless we don't exceed 10,950, we will continue to witness selling pressure. And looking at the pattern structure, we could be testing the lower end of support zone. So at the current zone, I would want to be, one can go for a selective short position at the current zone. 10,950 would be the stop loss for the Nifty on the upside, and the lower side we expect targets of 10,700 to be achieved.
Okay. And Chandan, would you take any trade on the Nifty or the Nifty Bank on open? 0.5% for the Nifty and about 0.25% for the Nifty Bank.
Yeah, Nifty has mentioned that I think it is likely to respect the support of 10,777-800 zone. It opened higher. So I'll wait for a small dip towards 10,850 and we'll take the position for a bounce towards 10,929.
Chandan, I understand we have to let you go, so thank you so much for that. Manav, stay on if you can. We'll probably ask a couple of questions to you in just moments from now. But Deven, Choksey, you were talking about pharma numbers and the headline numbers. Sun Pharma numbers, do they instill confidence to go out and initiate a long here?
Neeraj, I think the overhanging situation of the reportings of the whistleblower is required to be cleared first to begin with, and I'm sure that if it gets cleared, the stock will not be available at the same price. I think it will definitely get re-rated in upside. As I see it, from a valuation perspective, the stock remains at an attractive valuation currently, and considering the fact that the Taro's performance has contributed in this particular quarter and likely to sustain, my viewpoint would be that downside in the stock is definitely limited. As I was mentioning, the overhanging situation pertaining to the outcome on the whistleblowers' queries or reportings, it could be dragging the stock price to a certain extent. But in my viewpoint, if the downside is limited, it's worth taking a chance and probably gradually buy into the portfolio, because I see the working of the company continue to remain relatively positive. They have absorbed all Renbucks related issues also by and large into the working of the company. So obviously domestic market portfolio too is suggesting that the company should be relatively better off. So yes, one could probably gradually accumulate the stock into the portfolio.
Deven, between Maruti, M&M, obviously Tata Motors, we all saw the kind of loss they reported and for what reason they reported the loss. But what were the highlights for you from the four-wheeler pack and the numbers that they reported? And is there any sort of an encouragement that one can seek to go ahead and buy afresh into this space?
So certain things definitely surprises you at point of time. In case of Maruti also, in the results, on the forex side probably surprised us. Though these kind of things don't repeat every quarter, so certainly it is better to buy into the stock, because the model launches and the market share that they command, they are both in favor of Maruti. So from that perspective, Maruti should remain reasonably good play. On a day of result, the stock really gave an opportunity at the fall level. So that was a good opportunity, I must say. Market gives this kind of opportunity in between. Suppose if you do get some corrective downside, probably that would be a good buy for Maruti. Second one could be for Ashok Leyland. The commercial vehicle space in particular looks convincing from financial year 19-20 point of view, given the fact that BS6 is coming up and the new vehicle orders would be placed in this particular year. Scrappage policy is also going to add additional demand for the vehicles, and the company's focus on generating 20% revenue from services is also suggesting that going forward they should be really seen as a company weathering the shocks of the cycle of the industry much better, given that kind of a mix that they want to create. So from all in all perspective, I guess I think the Ashok Leyland in the commercial vehicle space, Maruti in the passenger vehicle space, and Bajaj Auto in two-wheeler space should be seen as a good choice to buy into the portfolio from the auto basket.
Within the NBFC space, I mean, breaking it down to, you know, your housing finance companies, your pure play lenders, as well as your gold financiers, numbers have been sort of picking up. They've not been all that bad. Would it be the start of the turnaround, or liquidity pressures, according to you, still continue to persist and you just rather be safe and stay out for a while longer?
So you distinguish, I think, the NBFC space, and within that the companies too. I think housing finance and the retail finance, they are two attractive play continuing as far as I think the universe is concerned. The demand growth for the credit is really remaining on a higher side, and that's an inspiring factor too. Likes of Bajaj, likes of HDFC in the respective space, I think they are relatively, I think, better off. A, because of the well capitalized balance sheet. B, because of the model on which I think they've been sustaining and working. C, the management of effective management of non-performing assets. So that is also, I think, working much better in that case. Though the valuation wise they may be relatively on the higher levels, I think, in the basket of NBFCs, but I still feel that I think it is a premium well paid, because I think you are seeing the growth continuing of 20-25% in case of housing finance, and I think for consumer finance Bajaj is clocking continuously, I think, 35-40% and above rate of growth. So from that perspective, I think some amount of premium is justified too. And that is why we are selective. We feel that I think the generalization on the NBFC side won't be of much help. So frankly, I think would continue to operate with these two companies within the NBFC space as far as the portfolio investment goes.
Okay. You know, stocks which are reacting to the numbers also include a Natco Pharma, which is now the top loser in the session. Before I get in the fundamental view there, Manav, Chopra, final thoughts from you. A Natco Pharma which is corrected 4%, and Indian Hotels which has risen 3%.
Okay, I'll start with Natco Pharma. You know, the prices have actually breached its important weekly, monthly support zone, and you know, I will not be surprised to see if the prices continue to trade below 650 for next a couple of trading sessions. This could see another decline of 10-15%. So you know, it has breached important support, and since past couple of trading sessions, you know, we have witnessed some sort of a distributive patterns and a sharp sell-off. So you know, lower targets of 580-85 cannot be ruled out. Specifically about Indian Hotels, you know, the stock has been you know, forming a higher base around the levels of 130-135, and overall the trend remains bullish. You know, it has been consolidating its gains. So you know, if the prices continue to hold its important support of 135, eventually it could see immediate targets towards the levels of 160-65. On the lower side, one can continue to maintain a trigger stop loss of 130 on the lower side.
Okay, Deven, Choksey, quick thoughts. Bata India or Natco Pharma actually, which is down about 4%. Any thoughts here on the results?
No, Neeraj, I haven't read the result in total, so I would probably talk to you on a subject little later.
Just one more point, and this has been a query that's come in quite a few times, is whether or not Sterlite Tech, according to you, Deven, is a good buying opportunity.
Sorry, which company you mentioned?
Sterlite Tech.
Yes, I think fundamentals are absolutely convincing about this particular company. You have a 10,000 crore plus order book visibility, and which is giving you the confidence that, okay, going forward next 2.5 to 3 years, the company's books are full. Probably I think the businesses will get reported. The target of 100 million profits, I think by 2020, is definitely, I think, looking inside more because of the fact that they continue to operate with a higher amount of thrust coming on from the both cable as well as fiber business, and where the capacity is also being expanded. They are thrust on, I think, supplying through the integration process on which I think they have got the module separately. There probably I think this company is registering higher amount of business compared to, I think, the other integrators who are basically supplying cables as well. So the company is, I think, showing relatively better performance. In my viewpoint, I think the growth continues for Sterlite Technology. Additional capacity coming in from the fiber optics and fiber optic cable is likely to drive further growth in demand. Plus their focus continues to be on picking up orders from smart cities kind of initiative of the government. So that also I think ultimately helps. And given the fact that I think higher amount of broadband spending is happening in the country, probably I think this is one company which is highest beneficiary. The government's proposal of I think connecting 1 lakh villages with the fiber and giving the digital connectivity, probably I think Sterlite Technology remains the beneficiary. So all in all put together, very high on potential and continuously delivering the performance at the same time, which is why I think I find that the corrective valuations of Sterlite Technology I think is buy opportunity.
Thanks for that, Deven. Good having you. Manav, thanks so much for joining in today and giving us your thoughts as well. Appreciate your times. One of India's largest foreign institutional investors, Aberdeen, finds substantial value in emerging markets. Speaking to Bloomberg Television, Aberdeen's head of Asia Pacific, Yu Yang, said that he's comfortable putting fresh money into India as the valuations are now reasonable post the correction. Listen in.
We've been looking at a weakening global economy irrespective of trade war. Of course, trade war and the threats of trade war don't help that at all. It just makes corporates defer decisions, sit on the fence waiting for things to play out. We've seen the rise of populism around the world, which is of course leading to greater protectionism, again more threats to global trade, again which affects the growth of the global economy. So I think there are plenty of concerns. Of course, there's still grounds to be optimistic as well. I mean, it's not all negative, and to an extent, markets have started reflecting that. I mean, our worry last year was that markets were shrugging off these concerns. I mean, it then hit markets quite badly towards the end of the year, and now they've stabilized. I guess that's the way markets operate. Bouts of enthusiasm followed by sort of distress and then a recovery of confidence. And we're seeing confidence recover slightly, but will that be dented with some of the full year earnings? Quite possibly. And more importantly will be to see how companies start talking about this year as a whole and the outlook for this year. But I mean, our best guess is that it will be a slightly dampened outlook for this year.
Thank you. I mean, the weakness in the US dollar, a dovish Fed, a resolution in a trade war, they're basically the parameters that many people have said would be setting up for a revival in emerging markets, right? I want to throw up this chart looking at volatility, because at the very least, after what has been a torrid few years for EMs, we're looking at volatility across emerging markets, actually at the lowest versus developed markets since 2013. So, you know, is this going to be the year where we see a resurgence in EMs? If so, you know, what's your top picks, and does a sustained strength in the US dollar throw a spanner in all that?
Well, of course, as a long-term investor in emerging markets and also in developed markets, one's always looking for that good year of performance, and certainly the relative valuation in emerging markets is attractive, and there are some fabulous companies in emerging markets and still some decent growth prospects, almost, I would say, irrespective of what goes on in the world. So some of the fundamentals driving the Indias of this world, for example, are still very, very attractive, whatever goes on in the wide world outside. So yes, I would say optimistic about emerging markets, but as we all know, in any given year, they're very prey to the fear and greed. So if people start worrying about markets, they pull money out of emerging markets. Again, it's almost irrespective of the long-term prospects of those markets, which of course for investors like us gives us great opportunities. We're very comfortable investing in areas where people are deserting, again providing the fundamentals remain good, and the relative valuations, as I mentioned earlier, of emerging markets are at a deep discount to many of the developed markets.
What about the Indian markets, Hugh? Because geographically, China obviously takes the top portion, and then the second largest geographic holding is really Indian markets. Do you expect that gap to close in terms of opportunities arising?
India has been a major exposure for us for probably around 20 years. So we've been overweight India for that length of time. We're still overweight India. One of the issues with the Indian market has been not so much one of quality, it's been more one of valuation. So it's been an expensive market for quite a time. Again, for us, the pullback that we've seen, quite sharp pullback in the Indian market and in the Indian currency, has given us confidence to add here and there, whereas previously we've been taking money out of India.
All right, that was Yu Young and his take on the Indian markets, overweight India, as he said, for the last 20 years. We're going to take a short break on that note, but on the other side of the break, we decode the December quarter earnings with Venkat Narayan of Prestigious States and Manish Gulati of HEG.